Hello and welcome to another BNFX Trader YouTube channel presentation. Our website is www.bnfxtrader.com. We want you to like our videos, subscribe to our channel, and share our videos. Make comments so that we can take it as feedback. Today we'll be talking about Fibonacci strategy. The Fibonacci strategy is an whole strategy that helps traders to make informed trade decisions. This strategy works best when the market is trending. So, like we are looking at the chart, the market is trending from point A to point B. We have a bearish trend, and from point B to point C we have a trend. Then from point C to D we have a bearish trend. So for all these trending price movements, you can easily draw your Fibonacci retracement or extension. We have retracement levels, Fibonacci retracement levels, such as 38.2%, 50%, and 61.8% levels. And we have extension, Fibonacci extension levels such as 121.4%, 138.2%, 161.8%. Let's go back to the chart. These are Fibonacci levels. This is the 38.2%. This is the 50%. It's 1.8%. We also have 78.4%. Then the 100% Fibonacci level. Then the extension, we have 138.2%, 161.8%. You can easily change these levels when you right click on the Fibonacci tool, properties, right click on the tools, click properties, then you have the common levels. On the levels, that's where you change your Fibonacci parameters. When the Fibonacci retracement goes beyond 100% level, it becomes an extension, and this implies a new trend is being formed. To draw Fibonacci on a chart in a downtrend price movement, the tool grid is dragged from the top, the high of the trend, to the bottom, the low of the trend, on the largest trend on the chart. This is dragged from the tip of the wick at the highest candle of the trend to the lowest tip of the wick of the lowest candle on the trend. Looking at the chart, the tip of the wick of the highest part of the bearish trend at point A, you drag the grid, the Fibonacci 2 grid, to the tip here. Then you also drag the other grid to the other tip here. This is how you plot your Fibonacci retracement levels for this bearish trend. So you can either retrace at 23.6, 38.2, 50%, 61.8%, 78.4%. Then you can also retrace at 100% Fibonacci retracement level. But when it gets past 100%, it becomes an extension. This is for a downtrend. For uptrend, you turn it the other way around. Now this is the uptrend from B to C. it can retrace at 23.6% or 38.2% or 50%. But as you can see, what happened, instead of retracing, it became an extension. It got past the 100% Fibonacci level here. Instead of retracing up to 100%, it extended, and we now have an extension. And the extension got to 161.8% level here. So if price does not retrace, price extend. Price either retrace or extend. Extension and retrace using Fibonacci can be combined with Elliott wave strategy to make good trading decisions. Fibonacci retracements at key levels 38.2%, 50%, and 61.8% tends to take price to extension levels at 121.4%, 138.2%, and 161.8%. Moved from point A to point B. Then a retracement occurred up to point C, which is a 38.2% Fibonacci retracement level, before price now continuing the bearish trend for us to now have an extension. The extension, price extended up to 161.8% Fibonacci level. Now a recap is that if price moved either in a bearish or bullish trend and it retraces, if it retraces up to 38.2% and continue in the direction of the trend, price may extend up to 161.8% and more. But if it retraces at 50% in the direction in the opposite direction of the trend, and price now continuing in the original direction of the trend, it may extend up to 138.2% up to 161.8%. Likewise, 61.8% retracement may take price to 121.4% up to 138.2% extension. Also 78.4% retracement of price, and now price continuing in the direction of the original trend. Price to draw Fibonacci retracement from point A to D, we start the grid at the tip of point A and we extend the other grid to the lowest tip of point D. Now we look at how price reacted to the Fibonacci levels. Price got to 27% Fibonacci retracement level here, and retraced a bit before continuing up to 50%, and retraced a bit to 38.2% before continuing up to 78.4%, retraced a bit, and you can see what happened. Price consolidated and ranged before turning down. So Fibonacci retracement levels act as level of support. Like you can see what happened when price came down to this level. It had a support here before bouncing up to this level and then before coming down. So we can measure the Fibonacci retracement level from A to B. Price retraced around 68% Fibonacci level before now extending to 1618. But there was a kind of range here, price range here, which is more like a bullish flag here between 23.6% and 38.2 Fibonacci retracement levels. Then price now continuing in the direction before reversing and then continuing an extension. So if I am to use Fibonacci levels to make my trading decisions, what I'll do is, let's assume this part of the chart. Let's assume this part of the chart has not happened. Let's assume we only have point A to B. So what I will normally do is, price has come up to a downtrend. So I will place my Fibonacci levels and expect price to get to 38, around between 23.6% and 38.2% Fibonacci level before I enter my buy trade. Then I'll take my profit at 61.8% Fibonacci level. So if that is what I am going to do for this particular trade, let's see what happens. Price, my trade got executed here, and price moved up to 61.8% retracement level that I expected price to move. I'll take my profit here before price starts to reverse. But there are instances where I can also take my profit, as this will be my TP1. I can even take my profit at 50% retracement level as my first TP. Then 61.8% will be my second TP. Then 78.4% will be my TP3. But for this occasion, I entered my trade around here. So once price gets to TP1, I can start to trail my profit. Once it gets to TP2 and I'm running two trades, I can close one of the trades and allow the second one to run. And the second trade, I'll be trailing it with my trailing stop, or I can move my stop loss into profit manually. So that is that for Fibonacci strategy. It's a good strategy. You can combine Fibonacci levels on monthly charts. You can relate it to levels on weekly charts. You can relate it to levels down to 1 hour time frame, and then look for particular levels where you have alignment of several time frame Fibonacci levels. Like if you have 50% on a 50% on monthly time frame, aligning with 38.2% on 4-hour time frame, that will give you a strong line or zone of support or resistance. And we did an illustration. There is a video on support and resistance. We know that these are levels of market force that is associated to supply and demand. So Fibonacci levels that cuts across 2 or more time frames, where you have alignment of levels across 2 or more time frames, can give you a very strong support or resistance levels that you can use to make your trading decisions. So Fibonacci strategy, you can use it to enter your trades when you have like a bearish trend and you expect a reversal or a retracement. You can use it to enter your trade. Enter your trade between 38.2 and 20.6. Enter your trade, your buy trade or your sell trade respectively, and then take your profit at 50% or 61.8%. You can also use it to map your strong support and resistance levels when it cuts across different time frames. from monthly time frame to weekly time frame, from weekly time frame to daily time frame, from daily time frame to 4 hour to 1 hour to 30 minutes to 15 minutes. So you can look at where there is alignment of, or like there's like a cluster of Fibonacci levels across many time frames. That will give you a strong support or resistance level. So this is the end of today's discussion on Fibonacci strategy. We want you to like our videos, subscribe to our channel so that you can see more videos, then go to our website to learn more on Fibonacci strategy. Our website is www.benefextrader.com. Till I come your way next time, thank you.